Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Friday, November 11th, and we'll see how things look for Monday, November 14th. And with the bond market closed, there's a lot of our things that we key off of that just are not available because they have to do with doing ratios and comparisons between the stock and bond market. But within the stock market, we ended up seeing another positive day. We were up almost 1%, and things are really starting to improve. I do have some charts that I'll go through and show you, and it does look like we're building a better base, but because we've moved up pretty far pretty fast, we're dealing with a short-term and even slightly intermediate-term overbought condition right now. So let's go back and talk about what happened. Right at the open, we had a higher open. We didn't go negative until a little bit later in the session. There was a slight pullback right after the open. As the day went on, prices continued advancing, and we got up to R1 at 39.90, and we're testing that 4,000 level. We went just a little bit into it in Friday's session, but then it came back down and we closed just below that. So we closed just off the high at above R1. We were up 0.92%. And this is kind of surprising to me anyway. Usually when the bond market's closed, a lot of folks in the stock market just decide to have a day off. Well, not on Friday. We still saw above average volume. The technicals are really shifting back a lot more positive. A lot of our sectors are improving. A lot of our setups are improving. But in the short term, as I said, we are becoming more overbought. Here is the session where we were kind of flat to slightly higher right at the open on Friday. We shot up a little bit, we pulled back, came back down, went just a little bit negative, and then we're able to gradually move higher above R1, came back down to R1, which once we broke through that, it became support, and we closed just above R1. So a pretty good day considering what has happened, and the big day that we had on Thursday. To see a little bit more follow through into Friday's session was encouraging. So what are some comments? The bond market was closed. As I said, China seems to be lessening its zero COVID policy. That could help the Chinese economy, and they're starting to turn around a little bit in their charts that I follow. And this could also help the supply chain issues. It could help companies that do business with China or have a lot of exposure in China. So that is seen as positive. And why I say China seems to be lessening, I haven't found any kind of an official announcement, but in the actions that are coming through, it does appear that that policy is being lessened. The S&P is just below the 4,000 level. We just didn't have quite enough to take us to that level or even slightly above it, even though we were slightly above it earlier in the session. The dollar weakness continues, and we were down 4.1% for the week. So if we see more follow-through upside action for stocks, you're probably going to see continued weakness for the dollar. The sector rotation, as I mentioned, that is improving. The Qs to the S&P, the large, mid, and small caps, comparing the growth and value of those different sectors, that is showing some improvement. It's not as robust as we've seen it, but we saw it more robust and it didn't really do us any good. So let's see if this can continue. The VIX is oversold again with the two solid up days. The RSI that we use, and I do have a chart of that, that is getting to the oversold condition, which means we've gone up too far too fast, since the VIX tends to decline when stocks go up. The new highs, new lows, they're not breaking out, but they are showing some improvement. And then I just have these on here. They really haven't been updated because the bond market was closed. Sentiment is still positive. And we had consumer sentiment, which came out weaker than expected. Now, the market could have fixated on that and went crazy, but it didn't. Even though this is not a huge report, it's more of just how are people feeling. But they expected it to come out at 59.6. No, that wasn't happening. It came out at 54.7, and I have a chart for that one. Our trend is neutral, but it's starting to turn up. It hasn't quite crossed over the moving average yet, but the green line's on top, so it is positive. So we're in a trendless environment with a positive bias and a trend that is, excuse me, starting to get stronger. Our bias is positive and our momentum is now positive. Now, things really moved up quickly Thursday and now into Friday. I mean, we're seeing over a 6% gain in 2 days. Don't be surprised now that we're overbought, especially in the short term. We might see some weakness in Monday's session, or maybe not. We'll have to see. Here is the daily chart showing how volume was still above average, and we just added to Thursday's gains. We're right underneath this R level at about 40.21. So we might, if we get any upside action on Monday, we might come up to about this level and then come back down. We still have the 200-day moving average looming overhead currently. Here's the new highs, new lows, where, yeah, they're going up, but they're not really breaking out yet. So we're seeing a bit of improvement with the 5-day. We're still kind of flat with the 10-day. And here's our moving averages, where now we have the 200-day moving averages still above. We've been able to recapture all of the 20s and the 50s. Now we're going to see if we can tackle the 200s. But be careful. Remember, we ran right into this moving average in August, and that was the top, and then we started going back down. So getting back above these averages and then closing above them is pretty important. We had the American Association of Individual Investors that came out, and remember, there's a lag time here of about a week, and this was after things were looking not very good a week ago, where they are now extreme pessimistic. But they've been that way a lot. But this is showing some extreme reading, which sometimes can help the S&P to go higher. Here's the consumer sentiment showing how it really dropped off. We have the 2-year Treasury yield and then the spread between the two. And again, are interest rates going to fall, or is sentiment going to improve? Because these two lines are still pretty far apart from each other. Here is the VIX showing that we're back down with the RSI in the extreme negative territory, which you kind of have to rethink that, because it's really positive since the VIX goes down when the market goes up. Here's some fib levels. We were able to break through this double fib level on Thursday and then just keep going. But we do have some more overhead resistance at about 40.09 with the next retracement level. And longer term, I just wanted to show this because it's improving, where we were able to get back above the 38.2% retracement. If we do have some kind of a pullback, we'll see, does this area act as support? And then another thing, Bitcoin and cryptos have really been in the news a lot lately. There's some real problems going on with FTX.com and one of the exchanges there, and that's really rippling through the whole crypto market right now. And it's been taking its toll on Bitcoin, where we've been going between around the 20 level for quite a while. Well, now we're dropping down into the 16s, and even on an intraday basis, we got down into the 15s there for a while. But just want to keep an eye on that whole situation there. So what's our outlook for Monday? The technicals, they've pretty much have already turned back positive, but we're overbought in the short term, and intermediate term, we're becoming more overbought. We don't have any economic reports coming out on Monday. The whole list of geopolitical events. And again, if you watch these videos on a regular basis, it's pretty much the same list that I've been talking about. We still don't really have much clarification as far as the midterm election. There's the Iran-Saudi situation that you're not probably hearing all that much about. And inflation and interest rates, that's the big concern for the stock market. And of course, the continuing war between Russia and Ukraine. So our scenario's not going with either the up or down, even though things are improving. You might be able to default to the positive side just because everything is turning back more positive. But be careful, because we're now overbought. The ADX is getting stronger, but it's not above the moving average yet. It's still below 20, but the green line's on top, so we default to the positive there. So our conclusion, the S&P is positive but becoming overbought. Short term, we are overbought. Intermediate term, we're becoming overbought. We have a few indicators like the CCI and some of our moving average studies and the PMO study. A lot of those things are becoming overbought. Long term, we're still negative though, as long as we're below that 200-day moving average. So thank you. Have a wonderful weekend. I don't know if I'll do a full-length daily video. I'm unsure about the weekly and intermarket analysis video. I'm still really battling with an inner ear infection that makes it really hard to look at the screen for very long, and that I have to look at it for a long, long time to be able to prepare those videos. So bear with me on that. I'll try to do them if I can, but don't be surprised if I don't.